and Geithner commenting on how he's trying to find the best mortgage reform plan that there is, and that's why there's the delay in that part of TARP 2. Senator Schumer saying he has a lot of sympathy for the secretary. How sweet. Applauding him for being thoughtful. We want to get a different take on the Geithner hearing now. We've heard him talk a bit about mortgages, but not a lot of details there either. Remember, the bad bank plan is all about cleaning up the bad mortgage debt, which got us into this mess in the first place. We want to welcome to Happy Hour Bruce Marks. He founded the Neighborhood Assistance Corp of America, and he calls himself a bank terrorist. Ironically, he himself has gotten millions in federal and city grants. And we want to welcome back the lovely and talented housing guru, Dani Babb, who is the author of The Accidental Landlord. Okay, Dani, let me start off with you. What in a good portion of the TARP 2, which the Treasury Secretary laid out kind of today, has to do with housing. What did you see in housing there that applies to us?
The biggest change that I saw is removing the $75,000 or $150,000 joint income cap for the first-time home buyer $15,000 credit.
So richer people can get welfare.
So richer people can get assistance as a first-time buyer, correct?
Yeah, because they're the ones basically right now who can only afford homes.
Pretty much.
Sorry.
Well, and actually, but Bruce, that underscores exactly my point. We have spent 70 years propping up housing and real estate to the point where it is totally unaffordable for the average American based on historical income levels. By any stretch of the imagination, it's got to come down another 20, 30, 40% just to get in line with historical norms, forgetting that it'll overshoot to the downside. Okay. When is enough welfare into the real estate industry enough?
You know, guys, let's take a step back. I'm just looking at the bar around there, and I'm looking for John Mack and Lloyd Blankfein and those CEOs, right? Because we go to their homes, and they're not there. They go to the second homes, and they're not there. Are they at the bar there? Because the fact of the matter is, we have to hold these CEOs accountable, right? Because they make $40, $50 million a year, right? And they are ones who have destroyed the mortgage market. They're the ones who continue to refuse to restructure mortgages to make them affordable. So when we have 350 people go to the home of John Mack in his beautiful estate, his multiple houses, and we go there and we says, we can't find him. So maybe he's at the bar there.
They have too many houses.
Those
That's why
are the
you can't
people
find him.
who. That's right, but we're trying to track them down. So please help us out, because those are the people. Don't blame the homeowners gang. Please don't blame the homeowners, because these guys, we know where the money was, where it went, and we know what's going on.
Right,
and the fact of the matter is, let's talk about Geithner for a second.
No, let's
Maybe
talk
we'll
about the
agree on
homeowners.
this.
They are to blame, too.
They signed the contract.
Hey, gang, we're talking about owner-occupants, non-investors. We're talking about mortgages where they could afford the $2,000 mortgage payment on day one and for day 5. But when that payment goes up to $3,000, $4,000, $5,000, they're structured to fail. Man. How can you blame the homeowners? Again, you can whine all you want, but the fact of the matter is people are angry and people know who to hold accountable. And that's the CEOs, gang. Come on.
So let's talk about Tim Geithner. He unveiled his plan, not very watershed moment for me, but go ahead. What was it for you? Is there anything in the plan that you liked or you saw that may actually help the homeowner?
No, when I really looked at him, what went through my mind is I said, that's Polson with hair. And the fact of the matter is that he's not doing anything different than what Secretary Polson did. He's not talking about a moratorium on foreclosures. He's not talking about restructuring mortgages to make them affordable. There's nothing in there for the homeowners out there.
Well, hold on, Bruce. 1 second. Hold on, because we know that, you're definitely for all of these loan modifications. I mean, you're so adamant about this that you're going to the CEO of these banking companies' homes and putting pressure on them. Let me get the other side of someone involved in the housing market as well. Dani, is this the right thing to do for a group like Bruce's to go and pressure these banking executives to forgive some of the mortgages, to give them lower interest rates, et cetera, et cetera.
No, this is a private sector problem, and if the private sector chooses to deal with the issue, if the banks want to modify the loan and the homeowner agrees, I'm all for it. But I don't agree that these groups should be putting pressure and going to the CEO's home.
Since when is this a private sector problem?
Danny,
We have
come on.
welfarized the entire
Let
problem.
Bruce and Danny.
Hey,
It should be a private sector problem. Whether the government jumps in, that's an entirely different story. But I think the main issue here is that median home prices dropped from about $247,000 3 years ago to about $175,000 today. That makes a lot of sense for a lot of people, and that makes it affordable for the median income. Let people, people were not stupid. If they were smart enough to be able to sign a contract, they're smart enough to be able to figure out that the mortgage rates can go up as well as down. Let people work it out with the banks, and the chips fall where they may. I'm sorry, but that's the only way we're going to see a real housing recovery.
If I can say something, Alan Greenspan goes in front of the Senate Banking Committee, and he says, Wall Street played me. I couldn't know. Well, if Alan Greenspan was played, how can you blame the homeowners? And the fact of the matter is, what we're doing is we're having the financial predator registry. We're identifying where they live, where they socialize, what bars they go to, and we're telling people, go. If you're going to lose your home, go and confront those people in a nonviolent way, but confront them. It's the accountability campaign. We got to hold those executives
So, Bruce, why don't you hold then also, do it at a higher level as well? Go to, Capitol Hill, where they're going to give these same financial institutions whom the CEOs you protest at their homes, they're giving them millions upon, if not billions, more money.
I agree with you 100%, and I'm tired of Congress posing. I'm tired of Schumer saying that he's trying to advocate for homeowners, or Dodd saying that same thing, when they're just as responsible as these other CEOs, because they're the ones that threw out the regulations. They're the ones that really have been the advocates for Wall Street. So I agree with you. I think there's a pox on all those houses and on all those parties.
Bruce, just tell us exactly why, sir. You received some money, some financial assistance then?
Oh, no. Let's talk about that.
All right.
Let's talk about that. Look what that does. I have legally binding agreements with over 90% of the lenders out there where they have to restructure those mortgages, where they have to do it based on what the homeowner can afford. And yes, that money pays for the counseling. Not in my pocket, remember. It pays for the counseling because we're doing the good work out there, getting the job done.
Who's
maybe
funding
the
all of that?
model can become the national model.
The taxpayers
Jump
funding
in there,
all of that,
Danny.
Danny?
Jump in there.
You know what? For everyone listening to this, and I don't know much about this organization, but I want to caution everyone, there are a lot of scams out there also along these lines where people are coming to you and saying for $5,000, I'll go and restructure your mortgage for you and I'll modify your loan. You need to be careful with this. Call the loss mitigation department yourself. To heck with standing on the lawns of the CEOs, in my opinion. Just call the darn bank. They don't want you to foreclose either.
Wait. I mean, I wouldn't want you to look stupid out there, my friend. But the fact of the matter is, do your homework. Do your homework out there. Do your homework. We don't charge one penny. We don't charge one penny for anybody, meaning everything is for free.
My welfare pays for it.
So do your homework, and let's figure out that we're not a scam. You're right. There are a lot of scams out there, but we've done this for 20,000 more homeowners out there without charging them one penny, not $1. So before you say things, get your facts correct, okay?
And Bruce,
please.
hold on a second. Let's not all beat up on Bruce because your organization has done a lot of good out there and has gotten some of these big companies to, pressure them to sit down at the table and rewrite these loans. Because I don't know why more banks don't do it, because they're going to lose money if the home's foreclosed. So at least this way, if they're not getting 10% interest on this loan, they're getting 6%. So let's not 100% beat up on Bruce.
We also have to watch out, if TARP 2, we have to watch out if TARP 2 goes through and we've got interest rates at 4% with the government subsidizing the difference, and then we've got defaults, we could have a significant problem. Maybe we need to look at making people put their real assets on the line, their checking accounts or 401ks like we do for student loans, which might actually lower the default rate and help everyone all the way around.
It's now a 201k.
A 201k, yes.
But when you restructure a loan, let's be clear on what has to happen.
When the government comes in and forces you to restructure a loan, let's be clear about it for real, man.
it makes business sense to restructure a loan because remember, we know that refinances don't work. And the servicers, if someone goes to foreclosure, they don't lose a penny. They have no skin in the game.
That's why
it's the investor that loses.
And that's why the government is required for Rebecca to put her guns to my head and force me to rewrite that loan or what?
So to speak.
Because if you're so short-sighted, that we got to put the gun to your head, we need to put the gun to your head so the homeowners don't lose their
Thank you for saying it. Thank you for owning it. That is
long-term
gun to my head
solution out there, then we don't have to put the gun to your head, okay?
Something to say.
No, I just want to ask Danny. Let's see if we can help solve this problem a little bit. The government pushing Fannie and Freddie rates down up to about 4.5%. Good idea, bad idea. Maybe this is the way we spark some buying in the real estate market.
It certainly will spark some buying in some areas. I don't think artificially creating a market is the answer to anything, whether it's through artificially low rates, artificially low prices, or any other method. So I don't believe that that's an answer.
Danny, sorry to cut you short. Thank you, Bruce. We've got to go back to the Senate banking hearing. We've heard Democrats question Geithner. Now let's hear from Senator